Policy changes out of Washington have many in farm country questioning the future of programs they've become accustomed to through the years. Billy Moore with AgriSompo joins us now with some perspective on the future of crop insurance. Billy, thank you so much for your time. So what is the outlook for crop insurance under this new administration?
Well, Tammy, it's important to know that crop insurance is a permanently funded program, and it would take considerable government policy change to threaten the future of the program. However, under this administration, as we've been surprised by some memorandums that were released this week, some funding has been halted. However, that has not impacted the crop insurance program. But I do think that a whole lot of things under this administration will be up for consideration and review.
Right. A lot of people keeping their eyes on D.C. right now. So we are in the middle of important pricing periods and sales season for crop insurance. So what advice do you have for our farmers as they make these decisions?
Yeah, correct. We are in the middle or right on the cusp of the discovery period that discovers the revenue prices for a lot of our major commodities as we approach the 3/15 sales closing date. And, we always advise growers to start early, start now, begin to meet with their agent, begin to ask those questions, update their yield history, update their records, and begin to secure projected quotes as we lead up those sales closing dates. Budgets are tight this year, and it's all the more important that farmers review their coverage options and put a lot of thought into their risk management plan.
So how do crop insurance premiums look this year versus previous years?
Prices from prior year are really relatively flat. There's not a whole lot of change in price. There are several elements that could change over the next 15 to 30 days, depending on what part of the country that you're in. One piece or one component of the rating that impacts crop insurance premiums quite a bit is the volatility factor. And that's a rating component that really takes into account the fluctuation in price. And that won't be discovered here for another 25 to 30 days or so. But it's important that growers start looking at projections. Premiums won't be largely changed this year unless a grower makes considerable changes to their program or plan. But once again, it's important that they start visiting with their crop insurance agent now and start taking a look at those and considering their own year-over-year comparisons to their plan.
Yeah, it's interesting because I was going to ask you about that, having no idea how those premiums are factored in and what all that's based upon.
Yeah, well, current prices, being discovered for the revenue products, which the vast majority of your major row crops are insured under the revenue plans of insurance, which are just the prices are discovered, on the commodity exchanges, and those are the key component in there. Crop insurance rates overall, don't vary a lot year over year. Of course, the rating is subject to change with the USDA's risk management agency, but those don't change a lot year over year. But what does fluctuate is commodity prices and volatility factors, which are components of that rating.
Yeah, that volatility plays a role. That's Billy Moore with AgriSompo. Thank you so much for your time today.